Dear friends, hello and welcome to today's edition of Tech Talk. As professionals, whether we are chartered accountants, cost and management accountants, company secretaries, MBAs or LLBs, sometimes we are perplexed regarding what specialized career opportunities to pursue. More precisely, as a chartered accountant, there's a huge scope in today's professional world. From the traditional sectors of audit, income tax, company law, to the more emerging, the more granular sectors include business valuation, transaction advisory services, insolvency practice, forensic audit, mergers and acquisition. Today I'm talking about business valuation as a career. In the last few years, precisely when the new Companies Act 2013 was brought into existence, there was a renewed focus and emphasis laid upon business valuation. Section 247 of the Companies Act 2013 deals with the concept of registered valuer. Parallelly with the opening up of the economy, startup companies became the order of the day. Unicorns is something we hear, it's now literally a buzzword for entrepreneurs. Wherever a new company germinates, for every startup, a valuation is required. So here comes the role of the business valuers. When that small company, after receiving seed funding, venture capital, private equity players putting in their funds, the company expands, and a time comes when that company aspires to list its securities in the stock market. That is what we call IPO, initial public offer. This is again a stage when a business valuation is required according to the SEBI guidelines. For every merger, we have seen number of mergers in the recent few months in India. HDFC Bank merging with HDFC, Zee and Sony merger. Plus, we see number of recent cases of demergers and restructuring. For example, Jio Financial Services demerging from Reliance Industries, and even ITC's hotel business getting demerged. Now, for every merger, demerger, there is a provision for getting a business valuation carried out. And finally, even in case of corporate insolvencies, when a company declares itself to be bankrupt, or when the creditors take a company to the NCLT to initiate the CIRP, the corporate insolvency resolution process, even in that particular juncture, a business valuation is required. Last but not the least, apart from these transactions where valuation is the core, we'll also examine one more area, and that is the world of statutory valuations. I refer to the International Financial Reporting Standards, more precisely, coming back to India, the Indian Accounting Standards Ind AS. Ind AS 113 deals with fair valuation. Ind AS 36 on impairment refers time and again to valuation and fair valuation, market valuation. Even Ind AS 41, the standard on agriculture, which is widely seen as the most important Ind AS for agro companies. As an example, this particular standard deals also with fair valuation. So even in the field of statutory requirements, when we deal with statutory provisions, whether under the Companies Act, whether under Ind AS, whether under Income Tax Act, whether under GST, customs law, there is an impetus on business valuation, asset valuation, equity valuation. And that is the reason why more and more qualified chartered accountants, cost and management accountants, and company secretaries are pursuing the course in order to qualify as a registered valuer, and we must remember that the regulator for valuation in India is the Insolvency and Bankruptcy Board of India, that is IBBI. To bring in more structure in the field of valuation, the Institute of Chartered Accountants of India has pronounced 9 standards on valuation, and these are known as IVS, Indian Valuation Standards. And these were implemented way back in 2018. The ICI has made it a standard in order to guide valuers, whether we are carrying out valuation of intangibles, valuation of financial instruments, or such other type of valuation. If a chartered accountant does not comply with these valuation standards, that might be deemed as professional negligence, which means these standards are enforceable, they are practical, they provide us with a basic SOP, a standard operating procedure, so that we can navigate and arrive at the right value so as to reflect the actual worth of the asset, of course, a financial asset. The opportunities are sky high, extensive, global, and multidimensional. So as chartered accountants, whether we enter into practice or whether we serve the industry by working in multinational firms, the opportunities in pursuing business valuation as a career has no bounds. It's just unlimited. More research coming into the entire ecosystem of valuation, which means valuation in the coming years will derive more and more importance. But again, I will conclude with a sentence that valuation also needs to reflect the true and fair worth of the financial asset. And therefore, a strong code of ethics is important for us to follow as valuers. And valuers provide a huge worth to the economy, to the investors, to the stakeholders, and to the government. This was all for today. Keep watching. In the next few episodes, we'll discuss specifically about other emerging areas like IBC, insolvency, forensic audit, systems audit, mergers and acquisition, and so on. Stay tuned.